This is your LMAX exchange technical update for Monday, May 22nd, 2017. Euro dollar. So the euro continues to extend its run in 2017 with the market breaking up into the next measured move objective zone at 112 to 112.40. These are measured move objectives following recent run-ups, the recent break above 110.20, that previous 2017 high projected to move to 112, and the breakout that we'd seen earlier this year or several days back in April above the previous 2017 high at that point around 109.05 had projected a gains up to 12.40. Once we get past this zone, the market then puts its focus on 113.67, which is a high going back to August of 2016. Daily studies are now tracking into overbought territory, though there is still room for these gains to run. At this point, it would take a breakdown all the way back below 108.40, which is the previous confirmed higher low now, to negate the current bullish outlook, with any setbacks in the interim ahead of this level viewed as corrective in favor of additional upside. Sterling dollar. So cable continues to extend its run in 2017 with the market chopping along but trading in a bullish consolidation above a previous resistance zone at 127.75, with the breakout now exposing a fresh measured move extension to 135 in the days ahead. Look for any rallies to be well capped though over the coming sessions up towards the 132 area, with daily studies starting to look a little bit stretched and the risk for some form of a corrective pullback before the market actually heads up towards that measured move extension at 135. If we do see a reversal and setbacks over the coming days, they're expected to be very well supported now into the 125 area, with only a breakdown below 23.60 to compromise this newly adopted bullish outlook for sterling dollar. Dollar yen. So dollar yen has recently stalled out up above 114, and this stalling out and bearish reversal right now suggests that the market could be poised for a retest of the 2017 low just ahead of 108. At this point, it would take a break back above this recent lower top at 114.37 to negate the current bearish outlook for dollar yen. Euro Swiss. Euro Swiss has recently stalled out ahead of the critical psychological barrier at 110, with setbacks now extending back below 109. Look for the market to extend declines from here, with a breakdown back below the 107.80 area to strengthen the bearish outlook and open the door for resumption of declines back down towards some critical support just ahead of 106. At this point, it would take a push above 110 to signal a more significant shift in the structure and take the pressure off the downside. Aussie dollar. So despite gains that we're seeing in Aussie over the past several sessions, any additional upside is seen limited, with the market correcting higher in favor of that next lower top and a bearish continuation down towards what is next key medium-term support at 71.60, lows going back to December of 2016. Only back above 76.11, the high that we saw on April the 17th, would compromise the bearish outlook for Aussie dollar. Dollar CAD. So dollar CAD has seen some sharp setbacks in recent trade, though the setbacks are only classified as corrective, with the broader structure still quite constructive, and so the market is now looking for the next higher low above a previous higher low at 132.20 about, in favor of a continuation of gains beyond the recent 2017 peak at 37.94 and towards 140 further up. Ideally, additional setbacks should be very well supported in the 133 area, again only back below 132.20 would compromise the constructive outlook. Kiwi dollar. So the New Zealand dollar has been consolidating off recent 2017 lows, but if the market does push higher, it should continue to be very well capped on rallies, with the market ultimately showing signs of a major top and fresh downside projected below the 68.18 2017 low that was seen earlier in May, and then a breakdown below there to expose 65 further down. At this point, only back above a recent high that we saw at about 70.90, the high from the 21st of March, would compromise the current bearish outlook for Kiwi dollar. SPX 500. The S&P 500 saw a sharp pullback in the previous week, though setbacks were very well supported, and the market continues to be focused on the possibility for an extension of fresh record highs well beyond 2400. The current record high now in place from the 8th of May around 2406, but the potential now for record highs to extend up towards the next key measured move around 2480. It would take a break back below 2322, the low that we saw on the 27th of March, to suggest that the market is putting in a more significant structural shift. But until then, any setbacks are viewed as corrective and well supported in favor of what could be a continuation of this impressive, very impressive bullish trend that we've seen to record highs over the past several years. Gold. So gold continues to show signs of bottoming out since 2016 after being supported ahead of 1100, with the market putting in a series of higher lows and higher highs. This most recent higher low now is sought out around the 1215 area, which will be confirmed on a break back above the recent 2017 high at 1295, exposing a retest of the 2016 peak at 1375 further up. Only back below this recent low that we saw around 1215 would compromise the constructive outlook for gold.